our conversation forward and let's understand that what his read on Rajesh Gopinathan's exit is. Sandip, good morning. Thank you for joining us.
Yeah,
Analyze the stock impact for us. While we can appreciate that the individual has a right to choose what they want to do, but frankly, when you take a decision which is such a big decision and you're taking a decision at a time when in general the IT sector is getting bulldozed from all the sides. So do you think more than anything else it's the timing of this decision which could really add volatility in the stock?
good morning. Thanks for having me on the show. Yes, I agree with you that this news has come suddenly, and despite the fact that TCS is a big organization with structural things in place, and they are bringing Kriti, who is 34-year experience, and he's a very strong candidate, very knowledgeable, very well entrenched with the clients and all. But this is something unexpected. So when something unexpected happens, then there is some volatility. So I would not rule out that. But we also have to acknowledge the fact that as you rightly mentioned, that the sector has been bulldozed by all this recent news of American banking system in crisis and all that. So there is a big hit which the stock has already taken. So I would say that there could be a minor volatility, and then things will stabilize. Also, I would like to add this fact that what the previous management of TCS and the current chairman Chandra has very well established is TCS as a brand in the client markets. You see the big marathons happening in the client market over the last several years, taking off the premium spots from the competitor in terms of advertising and the premium airports in the client markets. All these things have established TCS as a brand. So today, if someone wants to do a big IT transition, they will look at Accenture, TCS, maybe with same glasses. So I would say it is now a very stable compounding ship. There could be near-term volatility because of the surprising nature of the news, but I won't read too much into it.
And I guess it could be arrested pretty soon, right, Sandeep, besides the knee jerk, because Chandra is still there, remember that. And he's the one who's got his hand over not just TCS, but the rest of the Tata Group companies as well. His ouster, I would understand. But, maybe Rajesh could only be at best a near-term impact.
Yes, also we have to remember that as of now, his tenure is there till September. So a smooth handholding will also be there. And let me tell you, I have met Kriti several times, and I know him extremely well from that sense. We have met him several times in the last 11, 12 years of my IT industry analyst coverage. I can tell you that he is pretty hands-on with the clients, and he handles the biggest segment for TCS today, and he has been in the system for like more than 30 years. So I won't see much business impact or operational impact, but yes, surprise nature of news, there could be some volatility, although I don't expect much volatility as well. That doesn't at all, undermine the great work which Rajesh has done. He has been a great contributor. He has handled the company in a very nice way as a CEO and before that as CFO as well. But as I said, TCS has established itself as a big brand and as a big organization. So I think it is in a place where the organization has more bearing on the clients and the markets than an individual. That is the way I would put.
And, Sandeep, given the fact that we haven't seen many or perhaps no investor, interactions with him at all, what do you think the street is most looking forward to? Perhaps any sort of a change in strategy or a continuity from what, Rajesh had already put into place?
So, we will know more about it when, if there is an analyst day or something from TCS. But while, you are right that he has not interacted much with the investor, but at least with the analyst community, there has been last 10 years, there has been continuous interaction with Kriti as well. So the analyst community knows him extremely well. The investor community may have met him in pockets, but so whether there will be a change in strategy, I think, we will know only if there is a investor meet or analyst update or something. But TCS is doing phenomenally well, so I don't think you need to do big changes in the moving ship. It is a stable and moving ship, so I would expect continuity.
So if the stock falls today, will it be a buy then?
I think it is a buy with the correction which has happened on the back of the news in the US markets and the banking system. I would be surprised if there is a big move in the stock today. And even if it is there, I would expect that it will stabilize during the course of the day.
Okay. TCS has been commanding a certain degree of premium, even though their growth, some would argue, has not really kept up to what analysts and markets have been wanting. Why do you think the stock is commanding a lofty premium to TCS, to Infosys, and even Wipro?
So the answer is in stability. Investors always assign bigger multiple to stability. So if you see before yesterday's exit, only 4 CEOs have been there in TCS. So it is a very, very long tenure which each CEO has been there. And even if the vertical heads, business heads, if you see, there has been very little churn. Everyone is there from 25, 30, 35 years. So it is a very stable company with a very, very, entrenched management. So people assign bigger multiples or more premium to a stable SIP. Secondly, if you see their attrition numbers also, they are lowest in the industry for several years now. So, all those things gets a bigger premium. Also, we have to remember that it is much bigger in size when we compare the multiples to the second largest player. So the premiums are assigned because of all these factors taken together.
Okay, all right. Sandip, really appreciate your time and thank you for joining us. Pankaj Murarka, good morning. Thank you for joining us. You can finish your call. I'll come to you again.
No, sure, I'm done. Sorry.
You sure?
Yeah.
Okay. Pankaj, I remember when Chandra decided to accept the new role of chairman of Tata Sons, the TCS stock the very next morning fell because nobody knew that what Rajesh would be able to deliver. Today, Rajesh has decided to move on, and we are discussing what exactly 6 years ago we discussed when Chandra decided to move on.
Yeah, sure. I get what you're saying, Nikunj. Stock might have some knee-jerk reaction today, but I think what all of us have seen, meaning I can talk about my personal experience, having seen the sector for last 20 years, over 20 years, and having seen companies like Infosys, Wipro, TCS, large companies like these, they've built very deep management bench. And when these companies at that scale are growing at such a high rate, they have, in my engagement with these companies, I have seen that they have a lot of leadership, at the tier 2 and tier 3 levels. And meaning you look at these companies, they've given us so many industry-wide CEOs. A lot of business heads in Infosys are actually CEOs of companies across the sector. So while the stock might have a knee-jerk reaction today and could be down a couple of percentage points, but I don't see it having a meaningful impact on business. And more importantly, for TCS as an organization, my experience over the years, having seen this company for now 15 years since their IPO days, it is a very process-driven organization. So I don't want to dilute the impact a leader has. It has a meaningful impact, but at the same time, it's an organization which is very, very process-driven. So market might have some short-term impact, but I don't see it having any impact on their business from medium-term to long-term perspective.
In fact, Citi's got a sell rating on TCS with a target price at 29.90. They're saying that this resignation has actually come as a surprise to the street. The changes in strategy are going to be keenly awaited and some sort of an interaction as well. But hopes of a continuity from Krithivasan are going to be expected. That's Axis Capital, which also has a reduced rating on TCS with a 34.50 rupee target price. Moving on then, Pankaj, wanted to also get in your take on some of the other fresh brokerage notes and in particular on Reliance Industries. We have seen this bout of selling that has kicked in. Jefferies has actually got a buy talking about how there's limited earnings downside, capex peaking out, and that retail as well is likely to see steady growth. Your assessment as to how RIL has performed so far and what the view is?
Is it for me?
Yeah, Pankaj, RIL.
Well, so see, as far as RIL is concerned now, meaning, there was a traditional RIL which was oil and gas, and now over the last 6 years, what we've seen is the traditional business has just become 1/3 of their total value of the business, and the new businesses, which is telecom and retail, have become bigger drivers of business. And I think both those businesses are growing at a very accelerated pace or a much higher rate. And more importantly, they're in the process of transitioning the traditional oil and gas business to what they call new energy business, which will be aligned much more to cleaner fuels and clean energy and zero carbon footprint. So in that sense, I think RIL, from my perspective and our perspective, continues to remain a growth stock. It's a company which can deliver healthy growth because both retail and telecom businesses are delivering very strong growth, and they are at a point where even the traditional business, oil and gas business, is doing well because of the Russia-Ukraine conflict. Refining margins have been relatively strong. So I think stock will continue to do well over medium term to long term.
Pankaj, I'm going to just shift gears and move to something which we've discussed in the past: fintech, consumer tech. Interest rates will come down. Interest rate, they act like gravity for terminal valuations. Given that interest rates will be headed lower in next 1 year or in next, okay, all right, now you can see the man of the moment, Rajesh Gopinathan. Let's cut across.
All right, the man of the moment then, and Rajesh Gopinathan fielding questions then from the media as of now, saying he asked myself, if not now, then when will there be a better time? We will, of course, keenly watch out for what the stock price reaction is going to be. It's been a mixed reaction when it comes to the brokerage. Some of them are a little bit cautious on what this news could potentially mean for TCS, at least in the short term. Sandip Sabharwal as well as Sandip Agarwal are both with us to take this conversation forward. Sandip Sabharwal, I'm going to come to you. I'm sure the street is going to watch out for what exactly is going to be the strategy or really, the continuity with this change of hand. What do you think the street would like to hear the most?
So I think the management has spoken, and in my view, although because it's a sudden development, there could be some negative reaction in the very short term. But given the strong bench strength that a company like TCS has, and even the transition from Chandra to Gopinath, the way it happened quite smoothly and the company remained on the same kind of growth path. Specifically, this issue should not create any significant downside to the stock in my view.
Okay, and so do you believe, Sandip Sabharwal, going to come to you again, do you believe that that it's only going to perhaps be some sort of a knee-jerk reaction right now in the stock price? As you said, it is only going to be for the short term, and that by and large, when it comes to any sort of a dip in the stock, do you believe that would be a buying opportunity for a bellwether?
No, that's a different question because that brings about the view on the stock and the sector. My view on the sector overall is not very positive given the fact that I see significant uncertainties next year on the demand front. So overall, I am very underweight on technology stocks, and to that extent, I am not looking to buy right now. However, if a stock like a TCS or Infosys, or for whatever reasons, corrects 10 odd percent or from the current levels, then I could be looking to buy.
Sure. Sandip Agarwal, you think that's going to happen considering the fragile sentiment right now with the IT space? And more importantly, we heard from Rajesh Gopinathan saying that the worst is behind us. They were off from COVID, war, everything, and he didn't think there was a better time to do this. While the worst may be behind, the best may yet to come. But should investors look at this current opportunity of underperformance within the entire IT sector and look to buy TCS now if the stock were to fall?
No, so I firmly believe that, this stock won't fall much. Maybe, 1-2% volatility, I wouldn't rule out that can happen any day on any stock. But beyond that, I don't see a volatility related to this news. As I said, that while not diluting the impact of Rajesh, I would say that the deep bench strength for leadership which TCS has built, and as I would reiterate that only four CEOs have been changed in last so many years before yesterday. So it reflects upon how well the team is and how much stability is in the organization. I won't see this as a reason for the stock to move much. Having said so, I would say that if there are no big problems from the US banking system and if there is a stability there, I would say that IT stocks have corrected more than required already. And now with attrition stabilizing in a big way, I would say that, going forward, the earnings would surprise or would surpass revenues in a big way. So we may see mediocre revenue growth, but much higher PAT growth, because if you see all the last few quarters, because of high attrition, the margins have been under immense pressure, which should now ease off. So that is the way I would put. So I would say that this is a great opportunity to buy.
Agarwal, good to have you on the show. We'll let you go on that note.